It's officially been about 2.5 years since I started my investing journey, and I can't believe how quickly time has gone, but also how slowly time has gone. A weird contradiction. So in this video, I'm going to be talking about kind of what my investment strategy is for 2023, and I will also then cover my Vanguard portfolio. So if you want to skip ahead to that, then I have the timestamps in the description, so you could just skip to wherever's relevant to you. But yeah, I thought I would cover my overall investment strategy for those of you who are new around here or have never actually watched my Vanguard videos. Then hopefully this will give you a vision into kind of what I'm doing. So in 2023, my investment strategy actually hasn't really changed from what it has been for the past 2 years. So I am a passive index fund, tracker fund, ETF investor. I want to take myself as much as possible out of the equation and let the powers that be in the stock market kind of do its thing. I don't want to pick really individual stocks and make that a big part of my portfolio. I really just want to be invested in ETFs / index funds / trackers. But the other thing that I am going to continue to do in 2023 is make sure that I invest as tax efficiently as possible. So that includes investing within a wrapper, so an ISA is what I have chosen, a stocks and shares ISA. That means that any interest earned or any dividends received within that ISA will be tax-free. Also, this includes investing via my pension. So putting as much money as possible into my pension so that that's really the most tax efficient way of investing. So yeah, putting money in my ISA and putting money in my pension are the two tax efficient ways that I'll continue to invest in 2023. And the other part of my strategy, I would say, is to continue to be a long-term investor. So as I said, I have been in this for 2.5 years, which in the grand scheme of things is no time at all. My hope is that I will not even touch a penny of these investments until I have reached at least the 15-year mark, so I've got quite a way to go. So that's what I'm aiming for. Maybe I won't even touch it at the 15-year mark, maybe I'll wait to the 20 or the 25, but I don't plan to touch it at the very least for 15 years. So each year you are able to invest in one ISA, one stocks and shares ISA, so you can have multiple open. So you may have one open with Vanguard, one with Hargreaves and Lansdown, one with Fidelity, but within a tax year you can only put money into one. So in the past 2.5 years I have used Vanguard, and in 2023, guess what? I will still be using Vanguard. That is because I haven't had a problem with it. I'm happy with it. I'm happy with the funds that I'm able to invest in within Vanguard. The thing is, for some people, it's not the best option because you can only invest in Vanguard funds within Vanguard, whereas, you know, the likes of Hargreaves and Lansdown, you can invest in lots of different funds. But for me, that's perfectly fine. Another reason is because they're just very low cost, and low cost means keeping more money in my pocket, which I'm always for. And also I just like the history of Vanguard, it being founded by John Bogle or Jack Bogle. It's got a long history and long standing, and that has it gives me some form of confidence, additional confidence than maybe some of these newer brokerages. But that is just personal preference. Doesn't mean it's safer, it's just what I personally prefer. The last thing that I will be continuing to do in 2023 is to invest in 6 funds within my Vanguard stocks and shares ISA. Well, technically it's 7 funds now because I have added an additional fund for my son, but I am doing a whole separate video on that will be coming out after this one. So yeah, I won't talk about that much today, but my strategy is the same 6 funds that it always has been. And that includes FTSE All World VWRL, the Pacific excluding Japan Stock Index Fund, the S&P 500, the FTSE 250, the ESG Emerging Markets, and the FTSE All World High Dividend Yield. And I've been asked this question I don't know how many times on my channel during my Vanguard portfolio updates, why I have chosen to not just invest in the VWRL, which is like a total stock market fund, like a global index fund, which I totally can do and think is a great thing to do, but by investing in some of these other regions, I'm basically giving myself extra exposure in those regions. This is just, again, personal preference. There is no calculator I used. I didn't seek financial advice on this. This is all just what I've personally chosen to do. I have my goal weights, and this is just, again, because I want 50%, so the majority of my portfolio to go to a global fund, but then I've got the remaining 50% sprinkled among the different regions. So mainly 10%, but I have increased the US region, which is the S&P 500, to 15%. I just feel like because the US is so, it's the hub of Google and Facebook and Meta and Alphabet and Microsoft, and I could just go on and on. Because it's the hub of these places, and I believe these places have a big part in our future, I just want more exposure to the US, so that's why that's at 15%. And then the ESG emerging markets, I want exposure to emerging markets, but I don't really want that much exposure. So before I had it at 10%, but now my goal weight is 5%. So every single month before I invest, I have a look at what my goal weights are and compare it to what is actually happening in my portfolio. So for instance, in the month of, this month, even though my goal weight for VWRL is 50%, when I actually look at my portfolio, it makes up 47% of my portfolio. So that means when I'm going to invest at the end of this month, I'm going to put money to try and get that closer to 50%. Whereas, for instance, the FTSE 250, my goal weight is 10%, but it's currently at 12.3%. So this will be something that I don't invest in because it's technically over what my goal weight is. Again, this is all down to personal preference, why I have set it up like this. It just helps me process it, it helps me know where to invest, and it just gives me some strategy. So in terms of return since inception, so we're talking about 2.5 years ago roughly, the VWRL has returned me 13.28%. This is much, much better than last month or the month before in December. Things are on the up. For the Pacific Fund, it's 27.15%. For the S&P 500, 21.89%. So another really good fund. FTSE 250 is negative 5.95%, which doesn't seem great, but in comparison to what it was in December, it's a vast improvement. Then for the ESG emerging markets, we have negative 6.97%. Again, this fund has never ever done well for me. It continues not to do well. And then lastly, we've got the FTSE All World High Dividend Yield, which is 23.19%. So the total return since inception is 11.84%, which is much, much, much better than what it was in December of negative 0.26%. Now with dividends, for some of these, the dividends aren't automatically reinvested, so I just see extra cash come into my Vanguard account that I'm able to invest basically, whereas some of the funds automatically reinvest those dividends. So VWRL is one of those ones that doesn't automatically reinvest. So when we take dividends into consideration, the return since inception is 17.65%. For the Pacific Fund, it automatically reinvests, so it's the same. For the S&P 500, it's 25.43%. For the FTSE 250, negative 0.01%, so basically I'm pretty much at zero. I've leveled out, I've not moved anywhere. And then for the ESG emerging markets, it's the same because this automatically gets reinvested. And then for the FTSE All World High Dividend Yield, it's 33.39%. So that's 10% more than just the capital return. So the gross return for that one is 33%. So that's really, really good. So if we look at the total return with dividends, it comes to a total of 15.3%. So this is encouraging to see that it's moving in a much healthier direction than it was in the last quarter or last 2 quarters of 2022. But we are really in for another weird year. I just don't know what to expect. Recessions may be coming, housing market crashes may be coming. So even though this is looking good right now, how long it will last, I don't know. I'm just continuing to go and not really get too sidetracked by this. But I hope that these videos still encourage people, still make you feel like we're on this journey together. If you're investing every single month, I hope you feel that you're not alone, and this kind of just encourages you to keep going as I keep going. So I hope you have enjoyed today's video, and thank you for watching, and I look forward to seeing you in the next video real soon.